Thank you, everybody, for getting on this webinar, and thank you, Adam, for getting on this call. As always, please leave your lines muted during the presentation and use the chat feature only for asking questions. Adam will be available for that at the end. We are recording this, so we will make sure to get this out to you after the webinar, so you can go back and review any of the items. And with that, I'd like to introduce Adam from EF Cost Recovery. He's going to be covering information about the Employee Retention Credit. Please be aware, though, this is something you can do on your own, but Adam is going to cover what their company can offer and some ins and outs of the Employee Retention Credit. And please ask any questions at the end for Adam on any ins or outs. So with that, I will get this started, Adam.
Thank you, Hope, and thank you, Eric, for organizing. I'll just give you, before I jump into the slides, a quick background on EF Cost Recovery. We're a niche cost recovery consulting firm out of southeastern Massachusetts. Our core business is the Research and Development Tax Credit, which won't have any application here today, and the WOTC, so the Work Opportunity Tax Credit, which is a federal income tax credit that incentivizes employers to bring employees back into the workplace that they deem to have barriers to employment. So the ERC was just a natural fit for what we do. So we put this service together back last March, and we'll talk a little bit about it today. If you don't mind going to the next slide, Eric. Thanks. So what is the Employee Retention Tax Credit? So the ERC, as I'll refer to it, was put in place back last March. It's hard to believe it's already been a year. It was part of the original CARES Act. However, it was like, the forgotten little brother, because no one paid any attention to it whatsoever, because at the time, if you took a PPP loan, you could not use the Employee Retention Credit. So no one paid attention to it. But what is it? It's a fully refundable payroll tax credit that is an incentive for you as the employer to retain your staff during COVID. Next slide, please. Who is eligible? For purposes of this conversation, all of you will be eligible as restaurant owners, and we'll get to that on the next slide, but you're all eligible for this. If you don't mind, just jump into the next slide, Eric. So this is, to determine eligibility, this is what we need to look at. As part of the CARES Act, which was the original law put in place for 2020's purposes, you either had a full or partial suspension of operations as a result of government order, which you all did. You've been operating at reduced dining room capacities for periods of time. You couldn't even open your dining room. You were takeout only. So you all meet that criteria and likely continue to meet that criteria today. If you do not meet that criteria, then we can look at, did you suffer a significant reduction in receipts quarter over quarter? So what that means is, did your second quarter of 2020 fall 50% versus second quarter 2019, and so on and so forth. Once you determine if you're eligible, then it's a matter of looking how many employees you have. So if you have under 100 full-time employees, all wages paid to all employees in eligible periods can be thrown into the calculation. If you were over 100 full-time employees, we can only look at wages that were paid to people who did not work. So essentially anyone that you may have furloughed. That's been completely changed on a go-forward basis. So as part of the Consolidated Appropriations Act that they passed at the end of December, there's four big things, I should say, that came out of that. The biggest one was that they made it so that you could use the ERC in conjunction with a PPP loan, and they made that retroactive. So now you can go back to 2020 and look at eligible expenses and claim those credits. They also made the threshold for a reduction in receipts much easier to achieve. Now, rather than having to show a 50% reduction, you only have to show a 20% reduction. And then the big one here is, that full-time employee threshold going from 100 to 500 really opens this thing up. When I mention full-time employees, those are true full-time employees, not full-time equivalents. So the calculation to determine that number is completely different than what you're all probably used to dealing with in, your full-time equivalent calculations that you all had to do for PPP purposes. This one is completely different. Next slide, please, Eric. Thanks. You can jump right over this one. So how much can you get from the employee retention credit? For purposes of 2020, eligible expenses up to $10,000 per employee, but the cap on the credit maxes out at $5,000 per employee. For 2021, that cap is $7,000 per employee per quarter. Now, there are a number of moving parts to consider when calculating this thing. You can't double dip PPP and ERC wages. So any wages that you paid with PPP funds in your covered period need to be backed out of the calculation. If you participate in the work opportunity tax credit, any of those wages need to be backed out of the calculation. If you took any of the COVID sick leave credits or COVID family leave credits, you need to back that stuff out of the calculation. So, we're not looking at, it's not going to be a straight, 50% of payroll in second, third, and fourth quarter. There are going to be expenses that need to be pulled out of that either during your 24-week covered period or outside of that if you are taking WOTC credits or any of the COVID credits. You don't mind going to the next slide? So just to give you an idea of what is at stake here, 10 location restaurant. This is actually a quick serve restaurant chain, Dunkin' Donuts franchise group up here in the Boston area. They have 10 stores, 210 total employees. So initially they're telling us, oh, we're over 100 employees. We can't do this. Then you apply the full-time employee calculation. They only had 45 that were full-time. So this is kind of a unique case in that they received their first PPP loan in 2020 very, very early on when it was an 8-week covered period window before, they kept moving the goalposts all over the place. 1 week it'd be, you need 8 weeks, then it was 24 weeks, and it was just always bouncing around. This group in particular was on an 8-week covered period, and, they got a sizable PPP loan. But the challenge they had, frankly, was that they couldn't get their employees to come back to work. They couldn't get them off unemployment. They didn't want to give up their $600 a week bonus. And even at that, they didn't have the need to staff all the way back up. So as a result, they suffered when it came to loan forgiveness. However, we were able to really get them a really nice employee retention credit to kind of offset that. Next slide, please. And then the benefits of working with a company like EF Cost Recovery, because, like Hope said, this is something that, frankly, you could figure out and do on your own, or you may have a CPA that's willing to take it on for you, or your payroll company may be offering, or there could be another consultant like us out there talking to you. Really what it comes down to is that this is what we do for a living. We are tax credit experts. Like it or not, we have to deal with the IRS frequently in our core business, so we're comfortable with it. So we can help you evaluate and determine your eligibility for the benefits and credits pursuant to the various COVID acts, determine and calculate what available credits you do have. And then we're going to provide reporting of the tax credits, including year-end calculations and supporting documentation. And then most importantly, as part of our fee, so our fees are all success-based, there's no cost audit defense. So if the IRS were to ever come and look at this thing and want to poke around, we will defend it and support it on your behalf at no additional cost. And that's the short and sweet. I'd kind of like to, if Hope and Eric, if you're okay with it, kind of open it up to questions from the group. I know there likely will be some, so I'd just kind of like to go back and forth with everybody and just make sure, you know, if anyone has questions, I can touch on them.
No, that'd be fine. Everybody can unmute and ask questions, or if you feel more comfortable putting it through the chat, we can do it that way too, whichever everybody feels more comfortable with. And thank you, Adam, for this high overview and, you know, for pointing, you know, taking us through this. I think, you know, it isn't something everybody explored last year, and it is something that everybody should be looking at for this year.
Yeah, you know, I mean, you should be doing it. You're eligible for it, whether you do it with us or not. Please take a hard look at it and take advantage of it, because it, you know, can help you get to the other side of this thing. You know, COVID has decimated the hospitality space, and, you know, anything can help. So
I did see a question come over on the chat. You can read it, or I can read it to you, whichever you prefer.
I got it. So how do you apply for credits for 2020? Is it a 941X form through your payroll company? Yes. So you need to request the refunds and claim your credits for 2020. You will need to file 941X, whether that's you doing it yourself, our clients, we do it for them. Your payroll company could do it, but you'll have to supply them with the information to do so. But that is the method for claiming the credit, is via a 941X.
I know that you were talking with somebody earlier who was asking some questions. Should he get all of his questions answered?
Frank, did you have any other questions?
Yeah, actually, I just, so I'm clear on this. You're not just getting back your payroll taxes, you're getting back an amount that's equal to the credit calculation, 50% or 70% up to 10,000 per quarter. Is that correct?
Yes. So if we calculate your credit out at $100,000, Frank, but you only were subjected to $70,000 in related payroll tax, you get the full $100,000.
Okay. That's what I thought. It just seems too good to be true, because I've been trying to figure it out. So,
well, yeah, there's not many fully refundable payroll credits out there, but, you know, or tax credits in general. This one is, and it's nice. It's designed for business owners like yourself.
There were a few more questions that came up in the chat.
Yeah. So PPP dollars used for payroll cannot be counted for ERTC. How is that being calculated? So we need to, when we engage with a client, we ask them for PPP documentation so that we can look at how much they received, when they received it, and how we're going to ask, you know, how many weeks did you need in your covered period to exhaust the monies, you know? So you may not need all 24 weeks of your covered period. Maybe you only needed 16 or 20 weeks. And then we'll block out those weeks so that we don't double dip, and then all other eligible weeks we'll look at. Are wages paid to owners eligible for ERTC? Yes, as long as it's a W-2 wage. You know, if it's just owner's income, as in, you know, distributions or guaranteed payments, that will not count. It would have to be a W-2 wage. I have two companies. One is an S Corp. The other is a C Corp. My brother owns half and I own the other half. We both work in the business. Are our wages allowed for the ERTC calculation? As I noted above, as long as it's a W-2 wage, yes. Is it specifically identified as in, if I used PPP dollars to pay a weekly payroll, then is that weekly payroll ineligible? Correct. If you used PPP money for payroll, those wages are not eligible. Are tips reported by tipped employees eligible for the ERTC? The answer to that is yes, because you're paying tax on it. If the credit surpasses the tax amount paid in 2020, how will we receive the surplus? It will all come to you in the form of a refund check. That's everything so far, Hope. I don't know if anybody else had any others that they wanted to fire off.
I just wanted to say that I guess you don't have a contact slide here, but whenever I send out the follow-up email when this recording is made available, I'm going to include the flyer that has your contact information. It also talks about the program that we have. PRLA members get a fee reduced to 15%. Do you want to talk about what typical percentages that you do for this service, that you charge for this service?
So I know you dealt with Ed originally, Eric. Is that? Let me take a look. PRLA.
We have a flyer that I will send out.
Yeah. We're offering. It's not a 15. So that's what was confusing me. You said 15%.
I meant 10%.
Our deal with the PRLA is 10%. Typically, right now, our clients are ranging between 12.5% and 15%, depending on the scope. But yes, it is for the PRLA members a 10% fee based on what we're able to get for you.
Do you want to give out contact information just here on the webinar, or?
We did have two more questions come in too then.
Yep, I'll get to those. I'm just going to put a general email in here so that ERC recovery.
And then, like I said, when I send out the email to everyone that registered for this, I will also send this flyer out that has a phone number and an email address on it as well too. That email address exactly. Yeah.
So if we well exceed the 10K, 100% of payroll taxes goes back to us in a check. You receive, so if we determine you are eligible for $50,000 in tax credits, Christine, just to make it simple, and your related payroll tax was $30,000, you get back the full $50,000. Is there a deadline for filing the 2020 941X? 3 years. Like any tax-related matter, you have a 3-year statute for filing an amendment. We are getting conflicting answers about the tips. Some say the tips are not paid by the employer. Has the IRS made a formal answer to this? We're pretty clear on it on our end. You're paying related payroll tax expenses related to those claimed tips, and they are eligible. That's it. I think there's no more questions, at least at this point. I did include our email in the chat. If anyone wants to fire an email off, either myself or one of my team members, we'll get back to you. Happy to help answer any questions, offer a consultation, all that stuff.
One more question.
Do you see an extension into the last 2 quarters? There is chat about it right now. There are bills being proposed to extend it through the end of the year. We're hopeful because that could be really beneficial to a lot of people. Granted, you'll still have to be eligible, meaning you'll still have to meet one of those 2 criteria, either a significant decline in receipts or a partial suspension of operations. But we are hopeful that it will be extended through the end of the year because, I mean, frankly, I don't see some of these restrictions going away anytime soon. So.
Thank you, Adam, for bringing this to, bringing this topic to us and presenting it. I think it is great to keep talking about it and offering services if individuals are confused or not, if it's just too much and they need some help, Adam's company is there to help. Otherwise, you can do it on your own, but definitely reach out to Adam if you would like to work with their company on this. And we will get this recording out to everyone later on today with all of, his contact information will be there and the slides will be included with it. And with that, Adam, thanks so much for getting on this
Thank
call
you.
and giving us a little bit of your time today.
Thanks. You're welcome. Thank you for having me.
Thank you, everybody. And I hope everybody has a safe day.
Take care.
Bye-bye.